as I said, we're going to be talking about investment trends. So a quick question suggested by some of the panelists themselves. So what is your current investment focus? I mean, sectors, location, etc. Where are you investing? And how did your investment evaluate in the last period? So we can start with you, Hossam. Not working? It's easy? No, still not. This one.
Thank you very much, Wasim. Hi, everyone. My name is Hassam, and I'm here from Silicon Badia. We're a global VC, originally established in 2012, with two parallel funds. So we had a fund in the US and another fund in parallel covering the region. So for the US fund, we were investing in the strategy of going towards the early stage, so the seed stage typically. And for our parallel regional fund, we wanted to lead on the later stage, typically series A and B. And the idea was super simple back then. We wanted to connect the East and the West, get the most out of the lessons learned from the US and actively share them and apply them in our region. So we started off with the region being Egypt and Jordan, and now we're trying to tapping early into Tunisia and Morocco, driven by the support we have from our LPs, Smart Capital, as well as the ambitions we see in the eyes of the Tunisian founders nowadays. So, in essence, we are sector agnostic, so we cover all the sectors. But we keep our strategy to something that is also very simple. So we believe that for the next stage, we want to look at business models that solve real-world problems. And this is key, this is element, especially in Africa. And especially in downturns where you see trendy, I'm not even talking about VC on its own, trendy stocks on the NASDAQ, for instance, going super volatile as opposed to necessities that are going towards, recurring sort of valuations. So the key focus that has always been now and for the future was solving real-world problems. But I think for business models to succeed going forward, there has to be two items. And this is for everything, not just VCs. So it has to have pricing power and customer attention. And they both have to come together, right? You can't really say, okay, I'm going to start a marketplace and acquire customers and pay and incentivize them to pay and buy. Then maybe I can, in the future, have enough retention to offer pricing power and increase prices and all of that. I personally believe it has to come hand in hand. And a good example we've seen in the global stocks is Twitter versus Facebook. You can see that Twitter has all the retention in the world, but it hasn't been able to monetize. And this is why it's not doing very well. Netflix is another example. Facebook, on the other hand, has been able to monetize and has been able to sort of retain customers and have some sort of pricing power. And this is why it has gone well.
Thank you. So, same for you, Miriam. Your investment, where you're doing your investment, how did they evaluate in the last period?
Sure. So for us at 500, and also we used to be called 500 Startups, now commonly called 500 Global, we mainly focus on early stage investment. Based out of Silicon Valley, we've been investing across the continent. We've now done about 116 investments on the continent, most of them in Sub-Saharan Africa, but also we've done a lot of deals now in Egypt, and one in Tunisia, actually. And our thesis is quite simple. We're sector agnostic. We come in at the pre-seed to seed stage. We have been looking at diversifying our portfolio for the longest time. So the way that we approach it is that we look for the best founders in different markets. We invest heavily in business models. So when you look at our portfolio, very similar companies that we invested in LATAM and in Southeast Asia, also companies that we now today have on the continent. And to also make it quite simple and clear, our approach has always been that we don't only invest, but we also accelerate the companies that we work with. So commonly called our SF Accelerator, we work with the pre-seed companies for about 12 weeks, and we accelerate them in order for them to receive our investment.
Thank you. Blanca, what is your strategy? Where do you invest? What is your investment strategy? Which sector are you investing?
Yep. So hello everyone, I'm Blanca from Plum-Blé, and Plum-Blé is an American fund. We do three things because sometimes it's a bit confusing. We do corporate innovation, venture capital, and we run accelerator programs. Our venture capital arm is a family office headquartered in Silicon Valley, and we invest globally in all the continents. And now we want to focus more in investments in Africa. In Africa also, we have presence in Morocco, in Egypt, and in South Africa, with offices that run the programs. And then regarding investments, we have done 30 investments in all Pan-Africa. And our strategy is basically we invest in seed to Series A. We follow RAMs, so we are not lead investors, and then we are sector agnostic. So we invest in all. We cover 19 verticals, but we invest basically in everything. We see an opportunity. And we usually, our investment thesis is investing in business-to-business, B2B business models. And, well, I already said it, seed to Series A. Yeah.
Ben, you have the mic. So what is your focus, your investment? Where do you invest? Which sector? And how did it evolve? How is it evolving, or how did it evolve?
Thank you very much for having me today. So I'm Ben, I'm one of the founders of Briga. At Briga, we are a founders fund, so everyone in our investment team is an entrepreneur. So that gives us a very specific DNA. And listening to Zach earlier, it reminded me our first fund in Europe back in 2015, where to get there, it was a hell of a journey. But a lot of successes along the way. We now manage €500 million. We have offices in Paris, London, and Barcelona, and we're launching operations in Africa this year with offices in Southern Africa and one around the Western Africa region. And the idea is to do what we've been doing in Europe for many years, is investing early stage from pre-seed to seed, and supporting our founders with our experience as founders ourselves, sharing our war stories and what we've learned along the years. Plus, we built a strong scaling team alongside our investment squad to help them with all the topics around recruitment, organization, communication, and growth. So more than happy to be here now and continue building these bridges between Europe and the continent.
So I'll continue with you. What are the biggest challenges you are facing, or you're still facing, with your portfolio, with your investments, the startups?
So I think the similarities I see between Africa and Europe is, that capacity to expand outside of your border. I think it's very rare that you can build a company that answers to VC standard in one country. There's a few examples with European companies and with African companies as well, where you usually have to go overseas and expand into other geos, and that's usually when things are a bit harder, because obviously you're out of your comfort zone, and you need to sort of rebuild things that were obvious to you in the first place, and that's why I think there's a real pattern that could be followed in Africa, and especially in Tunisia. And we discussed this morning, Wassim, around the capacity to test and learn fast in a smaller economy, And if you look at examples like Israel or Sweden or even Portugal, which is becoming one of the leading tech hubs in Europe, that capacity to build a company with a strong tech DNA, which is very strong here in Tunisia, and then from there expand into bigger geos. I think that's something we're really interested in. So it comes with these challenges, but if you can make it work, then the outcome is incredible. So yes, there's the US, yes, there's Europe, but at the end of the day, when you're a founder and you're solving for a big problem, the chances of people around you having the same one are probably higher. So I think that Pan-African expansion to me is key.
Hussam, how do you face these challenges?
Yes, good point. I'm surprised you didn't mention anything about fundraising challenges and valuation challenges. It's the topic everyone's talking about today. Honestly, being Egyptian and coming into Tunisia and seeing the still reasonable round sizes at reasonable valuations and all of that is just beautiful, to be honest. And we've seen this very vividly in Egypt, right? Egypt started off with a very nascent stage, so much resistance from a huge pool of stakeholders, whether it's friends, family, investors, government, even customers were very resistant. But then you'd find resilient business models backed by resilient founders that would, be outliers. And I can only think of, a few champions that we were very honored to, drive the ecosystem forward. Fawry, for example, Swivel, for example. And this took the ecosystem into a completely different level of excitement, right? The challenge comes when excitement becomes too much, right? Because only then you start finding an excitement bubble where valuations are so high, fundraising is so easy, and all of that. Because the music at that time is so high, but we've got to learn that the music always needs to end, right? And the biggest challenge when the music ends is that when you once didn't find a ceiling to rounds and valuations, you're now hardly finding a floor to down rounds and valuations as well. So you find a pullback in risk capital, especially from global investors that are only here, for hits and runs. And you find it hard to actually maintain equilibrium again. So I want to know from everyone, what do you think a challenge like this can be faced? Because it's a trap, right? And Tunisia will probably go. It will grow enough to probably go through this. So we need to, have some sort of good communication to keep things at equilibrium.
Blanca, how do you face these challenges from your side with your portfolio? Yeah, go ahead, Blanca. Go ahead.
Yeah. So I think another challenge I see is that startups, raising funds is not, raising capital is not easy for them in the continent. Sometimes, not sometimes, like many times, they accept terms that are not fair for them just to have the money. As in the previous talk, Zach said, you can say no to money sometimes. So I think if it's not fair for you, and I see startups that in Series A, they are completely diluted, and the founders, they don't earn, they barely earn a part of the company. So I think as the ecosystem, as a VC firm, then accelerators and startups between one another, we should help each other to say no to unfair terms and promote being fair to the startups, because at the end of the day, you're taking them their company and they're what they've been working for. So I think that's a challenge I'm seeing, that they are really diluted in Series A, for example.
Miriam? How do you see? How do you face these challenges with your startups?
I think that we've faced very similar challenges to all the ones that were mentioned. But I think specifically something that we're seeing is definitely that founders are on the continent need a lot more support than sometimes us investors are able to provide to them, because, for example, at 500 we have quite a large portfolio. And at some of these stages, so at the pre-seed or seed stage, there is an incredible amount of support that founders need. For instance, cap tables are an example of it. You see founders who get to Series A with cap tables that are absolutely diluted on all sense. And so I think we are rethinking what also value proposition from an investor perspective means. So from our perspective, what does it mean to really support founders? But I think also, at least for us specifically at 500, another challenge we're experiencing is we are based in Silicon Valley. And so it's becoming even more challenging for us to be able to support founders the best way possible without being full-time on the ground. And so we have been working very closely with local investors to try to mitigate that risk. But even more so, it's becoming difficult to invest on the continent without being fully present. And it's something that we're seeing founders to require even more so as they get now to Series B, Series C, where we're now talking about price rounds, but also we're talking about scalability, we're talking about governance, and all of those things need to be tackled on the ground.
How to unlock? You said you invested in Tunisia, in Egypt. How to unlock, like the panel topic says, how to unlock more opportunities for startups in North Africa today, from a point of view because you invest in other ecosystems. So now I'm talking specifically on North Africa.
So when we look at North Africa, for example, we've done about 77 investments in Egypt. And we've done about 1 in Tunisia and 0 in Morocco. Well, 1 in Morocco and 0 in Algeria. So when we're looking at North Africa, it's also a diverse block, right? And the different countries have very different competitive advantages and very different parameters. And so historically, and even as we're looking at our investment record, Egypt has been a lot more of an attractive market for us because of the opportunity of the market. But we've also been looking increasingly at how do we do more in North Africa and the rest of North Africa, including Morocco, Tunisia, and Algeria, which for us are markets that are yet to be unlocked. I think that there is also something quite interesting about the way that North Africa is able to interact with the Middle East as well as with Sub-Saharan Africa, because something very interesting that Zach also mentioned earlier is that when we're looking at building portfolio, we actually think about our portfolio companies as being complementary to each other. And that's not only from a sector perspective, but it's also from a geographical perspective, because you want to make sure that you're able to actually provide a certain amount of value to your portfolio in different geographies based on the experience that you've acquired with investing in similar companies in other markets. And so we've been increasingly thinking about how does North Africa also kind of come into the block that we're building for Sub-Saharan Africa and Middle East. And so, for example, today, our MENA fund is based in Saudi, in Riyadh, where we've been doing most of our investments in the region. And so increasingly, I think there needs to be a bigger conversation about how does this region really become more complementary to the Middle East and Sub-Saharan Africa, but also how do the different countries bridge among each other, right? Egypt is a big enough market for us to just double down on Egypt and continue doing investments, even within Egyptian companies who are just focused in Egypt. But for Tunisia, Morocco, and Algeria, we need to see more companies who are also looking at expanding within each other. So looking at Tunisian companies who would like to be based in Morocco, Algeria, Egypt, so that they can actually fully unlock the potential of the market, right? Because it's not technically a united market yet. And so if you're looking at a viable investment opportunity, you cannot just invest in a Tunisian company who is simply focused on Tunis. At least within our investment thesis, for us, it's becoming very challenging.
Ben, how do you see it? How to unlock these opportunities for startups in North Africa?
Well, I think I definitely agree with what has been said. I think, first of all, there's not such a thing as a perfect market. It never exists, right? So at some points you don't have enough capital, and therefore the power lands into the hands of the investor. At some point in history, it's the opposite. And lately, there's been very few founders that have capacity to build great companies here in Africa, to hold tight and go through the storm and try to get the best investors you can who are going to support you on the long run, right? Because we all know this is going to be challenging for the next 18 months at least. And then once you secure your funding and you have the capacity to finance your operations for the time given to your next round, then the question of what do you do with this is instrumental. I think my experience as a founder and also as an investor in companies is that when you grow a company, when you grow a startup, you always play in a game where you have limited resources. So you always have to choose, when I have $1, where do I put that dollar in? Like, do I put that dollar in Tunisia, or do I put that dollar in Morocco? What's the outcome for the company? Why do I do this, and why do I do that choice? And so I think there's an amazing opportunity in North Africa to expand way more collaboration between Northern African countries, because obviously all these and being bold about building great and very ambitious companies. I think to me it's part of the game, and a lot of people forget about this. I mean, the VC game is a game of size, right? And so if you want to build a big company, you have to be bold and attack a big market. And as I said, maybe there's a few countries in Africa that can support local unicorns. But let's be honest about it. Like, even in Europe, how many unicorns are only local? It's a very limited number. All these guys, they have to grow somewhere else, and they have to be big in different geos and expand. So the connection within Northern Africa, I think, is super important. Building these bridges and these links between all the different tech hubs, and making sure that founders see it as a great opportunity to build big companies over these let's say, Arabic-speaking market, which I think is a lot of leverage to people. Like, why do we hear all the time, I attack the Francophone Africa, I attack the English-speaking Africa, but you never hear that much the Arabic-speaking Africa, which should, right? You should be able to say, well, there's a high chance that, we have an unfair advantage to build these companies, so let's do it and let's attack the whole of the region, which is massive and creates an amazing opportunity. Sorry.
So, Blanca or Hussam, if you have anything into Africa.
So, just adding on to Ben's point and Mariam's, I think we as VCs have to always remember and remind ourselves that we're not traders. Investing is not a yes or no, right? We as VCs only make money when the whole ecosystem thrives, when the whole ecosystem grows. So the investment cycle or the investment process doesn't always have to be about money, right? We are here at Silicon Badia looking for Series A and B stages companies that we are looking to lead. Given that the market is nascent, not have weekly fit our strategy at the moment. But as a responsible VC, I think we and all the other regional, global, and local VCs should try to keep the conversation ongoing. How can we help with connections? How can we bring other investors that maybe could add value at this stage until we can reach a certain stage where it probably fits mandate or...
Blanca?
Yeah, I agree with everything they say. Also regarding on expansion, I think sometimes people do the mistake of like thinking or expansion to Europe or to the US like is super easy, but at the end of the day, the US is one country and the European Union. So we have common laws, we have it's easy to extend from. If I have a startup in Spain, I want to go to Italy, I want to go to Portugal. It's not as easy as, for example, if I have a startup in Tunisia and I want to go to Libya to Algeria to Morocco. I think governments should also tackle this and come up with acts like, for example, the Startup Act in Tunisia, but also with maybe alliances to like try to make it easier for these startups. Because at the end of the day, is regarding, no, because then you get more countries, same laws, than to maybe deal with expanding to other North African countries. That's what I think.
Mm-hmm. Anything you wanted to add something? Okay, perfect. I would like also, Ben?
Yes, if I can add something just to give you a perspective on very simple maths, but you know, I think it helps understanding how the whole dynamic of VC investment works. If you take a 100 million fund, just to make maths easy, but then you can run that on a 25 million or on a 500. If you take a 100 million fund and you want to return that fund, we all know that a lot of the companies we invest in aren't going to succeed because that's the power law. So when we sign a check, we believe there will be, but there's at least one. That's the typical fund returner to return your fund. And once again, to do simple maths, you take 10% of a company, you need to exit the company for $1 billion, right? Which is a big number. And we're talking about that with the other VC the other day. To have $1 billion company, once again, need to generate 100 million revenue, right? And so if you take that picture in your mind and you're like, okay, 100 million revenue company, you can do this different way. You can have 100 million users that pay you $1 a year. That's one extreme. And then you can have 100 users that pay you $1 million a year. And that sort of potential doesn't come from the same template every time, right? That's why enterprise sales and they need 100 clients. And if you want 100 client corporate in Africa, this is going to be tough. So if your solution is, enterprise sales, enterprise software, you'd have to go overseas for some reason, or the $10 a year, then obviously, Tunisia may be tight by definition, but, if you expand to the rest of the Arabic-speaking countries in Africa, that's definitely possible. So I think having that sort of mindset around what are the simple maths for that business to thrive, what needs to be true for this company to be VC compatible, I think it gives you an amazing understanding of what the investment strategy of an early stage investor should be.
Okay, one last quick question. It's also from the panel. There was one question also suggested we can go back on it maybe later. But how to accelerate this ecosystem? I know it's a broad question, but if anyone can give one thought. One idea for you. Can start with you, Hussam.
I think we should communicate.
North Africa, of course.
Yes, we should communicate. We should share the lessons learned globally. And we should be proactive, right? We can't just be reactive as enablers. And I'm speaking also government side, right? Normally what we've seen is that the government comes after you start finding champions coming out. At first, it starts with the resistance, then it starts with competition, then it goes into enablement, because this is what makes sense. So we need to start, as VCs, communicating with regulatories and governments to start off the process with enabling rather than competing.
Mm-hmm. Maram?
I think part of it is what was just said around. Also, I think there is something about opening borders, opening IPs, opening actual knowledge so that knowledge can be transferable. I think historically we've had a little bit of a closed door mindset, especially within different regions on the continent, but I think this is also very applicable to North Africa. And because we are getting at this stage where we want to be able to actually accelerate the growth of companies, we have to be willing to open knowledge. We also have to be willing to open borders so that transportation can actually happen. And we need to be able to open IPs so that collaboration can effectively happen. And I think that that's always been something that's felt risky for a lot of different reasons to a lot of different countries. But I think that we are getting to the point where the ecosystem is relevant enough for us to consider those things.
So I agree with everything they've said, and I would also say maybe to, like as he said, cooperate with other players in the ecosystem. For example, when we came here, Plug and Play last week, we've been in that with the top ecosystem players in Tunisia, and what I saw is that they are sitting there. What I saw is that they have a will to work together and to open up and to help. And maybe I haven't seen that much. I invest in all Africa, but I'm more based in the office we have in Morocco, and I haven't seen that in Morocco, that willingness, and I think that is something we should do, to learn from, like, to help, like, between all the players, help each other, and then also maybe see, for example, which systems work elsewhere, try to adapt them to here, but bearing in mind where you are and what works elsewhere, and like sharing learnings, basically.
I'm going to be controversial here a little bit, but I think there are things you can accelerate and there are things you cannot, right? As my grandfather used to say, you cannot make a baby in a month with 9 women. That's impossible. So you can learn of how to make a baby, probably, and if you have some science around this and you share knowledge and stuff, this part you can accelerate, but the second part you cannot accelerate. That's impossible. So if you look at the US, I mean, these guys have been spending 70 years, 7-0, around building the ecosystem where it is today, right? So this is not going to happen in Africa in 5 years. That's not possible. You have the incompressible time of people creating companies, exiting, sharing knowledge, building these mafias of people who've been part of a successful company and then creating a new one, investing in companies again. So that takes time. However, we have seen a lot of ecosystems that have been catching up with the US because they just learned from what happens there and they adapted to what works locally. Because not everything that happens in the US there's a lot to learn, and if we learn together, if we share together, we're going to be more powerful and we're going to be quicker in knowing how to make that baby. And then we just need time. So I think collaboration between ecosystems is key. North, south, east, west, making sure that everything is shared. We should be in a collaborative environment where people share their mistakes and their learnings. Because at the end of the day, that's how you create a vibrant ecosystem, but you have to be patient a bit.
Thank you. We'll try to take 2 questions. It's the easiest ones we got. If you have the mic. Is there a mic? No? I'll run with the mic. As for 2, I have 2. One here, one there.
Thanks, sir. Sketchy a bit. Or maybe, no, it's not working. Okay. Thank you for this nice panel. Welcome all of you to Tunisia. So my question is a bit within the ecosystem. There is an ecosystem that is working on now in Tunisia, especially I'm with the TechDCO space here in Tunis, which is the CCIs, the creative cultural and creative industry, which is developing in Tunisia. We are trying to, and also in Africa in general. As an entrepreneur, I have my own company here in Tunis. we are trying to evolve a sector that's quite unvital, as Hussam have talked about in the beginning. Why most of the VCs, most of the investors that are trying to work with Africa are not looking into this sector that can be worked in on technological level? My company and other companies here in the TIC-DCO are transforming the culture, the identity, the creative industry into technological advances. So why don't we see more investment in this kind of sector?
Hello, everyone. Thank you for this amazing panel. So, just I want to know your planned strategies for investment or investment strategy for a video games company or in all the continent of Africa. So, just in global.
Okay, there was one question here, I think.
Hello. Yeah, my name is Fadi Bishara. I'm with Blackbox. I'm curious at the last question was asked about accelerating the ecosystem. That and we've heard it also in the discussions that there are some the founders are usually not confident and have challenges. And the topic of how to build this ecosystem, I've experienced seeing it happen and expanded in Europe in the last 10 years. Happened through role modeling and success stories, and as Ben mentioned, the mafias, and it's more kind of regenerative and start new companies again. We haven't heard much of this focus of to accelerate this ecosystem in each country or in any place. How do we really make the focus is on entrepreneurs, on the founders? How do we focus on what are the immediate obstacles and how do we remove them? How do we make them the one that we serve instead of the LPs? You know, the LPs is the mechanism versus really to make the LP successful is really we need to, you know, make the focus on the founders. So that's just a comment that I want to make. Thanks.
Thank you. There was, yeah, it's closer there.
Hello, Anis from Kaun, FinTech here in Tunis. So my question is, and you know, the states in many countries in Africa and specifically in Tunisia are invested in finding their next champion and how to be involved in the process of, you know, driving this ecosystem further. So my question is, if you had to talk to a regulator or the state, would you tell them to do more in the sense of regulation that's friendly to innovation, or to do less in the sense of deregulating so that people can find the room to actually innovate? And where do you see that kind of balance of finding a lot of energy of people who want to help, but maybe would probably be too involved in the sense of restricting the freedom of founders to actually innovate on the space? Thanks.
Thank you. We'll make it travel to the other side. And we'll finish with that question.
Hello, Faris from Commune Retail Tech in Tunisia. So in Africa in general, and especially in the, you know, in the non-Big Four, we all know that there's a lot of things that do not exist, and founders find themselves doing them. So I was wondering about this. We often hear that businesses need to be more asset-light and need to be focused. Where's the balance when no ecosystem yet, when things don't work yet? How do you manage to achieve that and still keep your customer happy?
Okay, thank you. So that's it? Yeah, Miriam? I saw you interacting.
I think I have I didn't catch that one just well, but I would like to address the one about how do we make the ecosystem more founder-friendly and how do we place the founders at the center of it, which kind of also relates to your question around how do we find the right balance between regulating and creating an environment that's free for innovation. I think a big part of the answer is definitely time. I think that one thing we need to see more of on the continent is we need to see this generation of founders who are able to go through the full cycle of building companies, exiting out of them, building their own fund, investing, getting involved in the ecosystem, and then learning to iterate from some of those mistakes. And we've only started now to see companies that are exiting, or even companies that are able to get to the Series B, C, D rounds, and this is so nascent that we are not yet at that iteration cycle where founders are the ones who are also driving some of these regulations or giving the thought behind it, because they're just still busy building their companies and they are still busy just trying to still understand how do they get it to a successful stage. So I think that a lot of it also is definitely correlated to between what are the things that we can accelerate, but also what are the things that we should not accelerate, which is we should allow the ecosystem to go through these cycles. And a lot of it is going to be a learning curve, and there is going to be different correction cycles. But I think ultimately it will be more of an ecosystem driven by founders who are actually able to use their lessons learned to now put it into things like regulation. And then there were two questions around creative industries and gaming and why is there not that much attention going from investors. I think that, so part of it is that when I'm thinking about a lot of the African gaming companies that we've looked at, and or just in general companies related to creative industries, there is still a work to be done on how to actually find product market fit. I have seen a lot of the companies who are still looking at trying to replicate just exist either gaming models or creative models from different countries, just kind of a copy and paste model. And we're yet to see what are models that could actually work within the continent and that are actually relatable to their target customers here. So I think there is still some work that's being done in terms of product market fit. At least from an investor perspective, I don't think that we are actively excluding creative industries or that we're not interested. I think that we are still trying to figure out with the founders what is the right product market fit model. But also I think a second thing that's also affecting that is in the meantime, we've seen other sectors take off like fintech, supply chain, e-commerce and all that. So instinctively, as an investor, if also your network is developing within those sectors, you are more likely to just be more helpful to a founder who would be building something in fintech if you are able to have access to that network creative one. So those two things happening in parallel, I think, are giving the impression that it's not of an interesting sector. And I think edtech feels the same and agri-tech as well. So those are sectors that have felt like have been a little bit left behind with the whole excitement around fintech, supply chain, e-commerce, crypto lately. But I would like to reiterate that that's not the case, and that investors are also still doing just a lot of work in trying to figure out, one, how do we bring value to founders in these sectors, and second, what is the right product market fit to address those sectors?
If your startup or the market does not fit our strategy at the moment, let's have a conversation, you know. Let's see if we can make it fit. Let's see if we know someone else that would invest in gaming, stuff like that. Let's keep the discussions going. That's just my thought. Don't underestimate the fact that you've been passed on from a certain, you know, pool of investors, so you think that this market will not fit anyone. You probably find someone, and you probably find a lot once we start seeing market fit globally and validation and all of this. But till then, don't wait. Speak to investors, make good connections, ask for help, ask for advice, and I think we're all happy to help.
now. So on what you asked about the regulation of the market, I would say, for example, a big problem that we've seen in Europe is an over-regulated market. And for example, the banking industry is struggling a lot because of that. It's a real case. So I would say enable startups and companies to succeed, but not to over-regulate, basically. So I would say it's better not to regulate for example, the payment systems. All of these, you have to, of course, have laws. So people use everything well, but I don't believe you should regulate in general. And I have a master in financial regulation, and I worked for Spain helping banks with regulation. So I saw how they struggle, and I saw, for example, banks in Spain. They came to a point where they didn't have any revenue from Spain, and all the revenue came from Latin America because Europe was over-regulated. So I'm more in this sense, to enable the market move freely.
My pleasure. Well, there's already a lot of answers, so I'm going to try to give a bit of a different perspective. I think maybe to the sort of creative industry question, which I think you can expand to other industries. To me, I think it's dual, right? I think first of all, I think a lot of investors are, a lot of investors come from a financial background, and they like rational stuff. And when you talk creation, they're like, well, it's probably luck, or they can't really feel how you can productize this and actually give a sense of how structured your approach to your product is. I think that definitely helps. I think that's one. And then the second one goes back to the size of the market again, right? I think people are like, wow, if I can do, how do I create a 100 million revenue company again, in that space? And what's the advantage of building it from here versus somewhere else? So I think, giving confidence of how big your opportunity is and how big, people can believe in you. I think it's instrumental. And it's never easy. And that's why, the VC investment game is always a tricky one where, you have to believe the founder. And then, the chances of getting there are scarce, but, you're fighting for it, and everyone around you needs to be helping you get there. But if it doesn't appeal, if it doesn't exist, if it doesn't appear as a possibility from the get-go, then people will probably turn down the opportunity and be like, oh, well, it's a great business, but it's probably not a VC-compatible business. And that's the difference between the two, and that's why sometimes people struggle raising money, because they don't actually have the capacity or demonstrate the capacity to build a massive business, right? A pizza restaurant is a good example, right? If you sell it to a VC, they're going to be like, well, if you tell them, well, we're going to automate and with robots and everything, and we're going for a full chain with restaurants in Tunisia, Algeria, Morocco, Senegal, Egypt, and so on and so forth. All of a sudden, you put stars into their eyes, and they're like, oh, wow, this is a massive opportunity. And they don't care if it's a pizza restaurant or not. It's like it's a big thing. So I think thinking big is the key element, probably, to convince people to follow you on your journey. And then to the interactions between ecosystems. I was having the conversation last night about how do you make sure that talent can bring that knowledge, can share that understanding. And so, regulation around visas and, tax as well, packages. I mean, that's things, Portugal did so well. One of the reasons why Portugal is becoming a tech leader in Europe now is because they open the door to people and they're like, well, you can come to Portugal, we give you a tax package, a tax incentive, we give you a visa, and you can start there. And all of a sudden, yes, it's a company created by a non-Portuguese, but they're going to end up hiring Portuguese people by, obviously, and so on and so forth. And then you're going to start building that cycle where people understand and learn, and then they want to create their own company, and then you have a second wave of Portuguese-created companies, and so on and so forth. So same story. I think, we were discussing last night about the complexity of getting talents in once you've raised your Series A, and you need more, power from people with experience. If, regulation makes things easier, obviously all of a sudden it's a different game, because people are going to be like, well, instead of being stuck in London, I have the Lisbon opportunity, but I also have the Tunis opportunity. I can go there and, go kite surfing on the weekend and have a tax package for me and my family, and, my kids can learn French and Arabic and English at school, and all of a sudden have a different life. So it's always a question of, pitching outside of the world and making sure they buy into it.
Thank you, Ben. I'm going to take your mic, sorry. Thank you, Ben. Thank you, all the panelists. Thank you for your attention. We're going to move on now. We can give them a round of applause. And sorry for being late. We're trying to run the questions, and I know it's a stressed moment that is going to start now because it's going to be a pitching session now. So thank you, Blanca. Thank you, Miriam. Thank you, Hosam. And I'm going to call our startups and the jury to join us here on the stage. So, yeah, I know, Nathaniel, thank you. But I started 50 minutes late, so 30 minutes late, that means I made you win 20 minutes. Okay, so we're going to have, as judges, going to call Zach, Launch Africa, Fatin, Flat 6 Lab, Walid, Endeavor. You know all of them, you've just seen them. These will be our judges. We have the table here, the chairs here. We're going to move them quickly. And for the startups, so we're going to have Sherry, which is an e-commerce app with embedded fintech for traditional proximity stores in French-speaking Africa. We're going to have Galactech. Their motto is, they don't waste gamers' time. One app is enough. That's what they do. It's a gaming tech. And Fulfillment Bridge. Fulfillment Bridge is a cross-border e-commerce platform offering logistics service to